Hello again, everybody. It's Harry Boxer, a technical trader. It's Tuesday, October 20th. These are the charts of the day. Today's something a little different. I'm going to review some potential short sales in preparation for what I view as a possible market pullback here of 6 to 8% or more, depending on how ugly it gets. But certainly we're due. A lot of technical divergences are occurring. I'm starting to see some stocks break down. And from our box of shorts list, I have several stocks to show you that can be considered for shorts. Now, this may not be for tomorrow, but sometime in the next few days, I feel the market will roll over in some of these stocks, which now look vulnerable and have been negatively diverging from the rest of the market. Starting with Abaxis, as you can see, had a really nice move in July and August, but since then has been basically going sideways. Finally broke down a week ago, and now it's formed a mini bear flag, and certainly looks ominous for a move down towards the 21 range for starters, and then beneath that, something in the high teens is possible for sure. AMAG has been in a downtrend since the June high, obviously negatively diverging from the market. Broke down when it broke through this area right here, snapped back to it, and then rolled over and made lower lows, but we're certainly in a defined downtrend. Maybe oversold, and any rally back towards that $40 level or so would be certainly an opportunity, $39.40, to enter short positions with a move down towards 30 in mind, or worse, depending on, again, how the market goes. Constant Contact has recently broken down from a topping pattern formed over the last 4 or 5 months following a nice uptrend. But this key level of support here was broken last week, and today the stock was down another 26 cents, falling to the downside, and now at four-month lows and on heavy volume. So looking for lower levels, perhaps as low as 15, and then beneath that, something around the 12.5 level may be doable. Chengyu, which I pointed out a couple weeks ago, had been in a nice uptrend after its IPO, topped out over the course of the summer, broke down in early September, rallied back in a mini bear flag, and now it's formed another one and has this stock looking even lower. Yes, it's over a little bit oversold here, and we may get a rally back up towards that 34.5 zone. That would be an ideal place to short it, provided it comes on lower volume as well. MCRS is starting to roll over here. Technicals are deteriorating. As you can see, the uptrend was broken. It snapped back to that, rolled over, and now it's a mini bear flag just above key support. $27 have broken, should lead to a quick move down towards that 22.5 range or lower levels. Prepaid Legal, PPD, certainly has broken its trend with a big sharp down day 3 weeks ago. Since then has done nothing more than move sideways in bear flag action with terrible underlying technicals. Any snap back towards 44.5 would be an ideal opportunity to short it, particularly on low volume, but we may not get that. The stock could see levels down towards the $30 range or thereabouts. Research in Motion, RIM, which has made virtually no progress in the last few months, broke down hard in September, bounced, but couldn't do that much. Volume was low. The overall pattern is a bear coil or bear flag type pattern. A breakdown of this key support level around the 63.4 zone could result in some very negative prices, at least to test a gap into the high 50s, and if the gap is filled, something as low as 50. STEC continues to look lower since I spotted it on the breakdown in September, and following that, a bear coil broke down, rallied back to resistance. Notice that it has not even been able to get back above its 10-day moving average, despite it being oversold. Another 5-6 day bear flag is formed, and this stock now looks like it should test the low 20s towards 21.22. Secondary support below that would be something around 17.18, but the stock certainly looks ugly and lower. STT broke down today. We added it to this list. This line I drew in here across tops and bottoms is a key support level that was broken, and how? With a thrust to the downside and heavy volume. Any rally back towards 49 would be an opportunity to short the stock. I want to also point out to you that the SRS, which looks like the best of the ETFs, notice that this did not make a new low below the September low like all the other ETFs did. It's holding up very well. There was a nice cluster of buying here on this move up to resistance, but it backed off resistance, came down, and now it's kind of basing out Any move up past 10.80.85 resistance would be a key, and any move up past 11.25, 11.40 zone would be constitute a breakout and have a target up towards that $13.50 range. Lastly, I want to show you a couple interesting charts of stocks in the auto rental group, which were probably the biggest percentage gains off the March low. Look at this move on Avis from 34 cents to nearly $14. The stock kind of been topping for the last 6 weeks, and today may have broken down. It certainly closed below this neckline of this multiple week support level. There is a secondary level down around 885.90. That would be my initial target. And if that's broken, we could see something in the high single digits, thereabouts. And lastly in that group is DTG, which, although it hasn't broken, it was down $1.21 today, and is showing signs of wear. This is a stock that went from 60 cents to $27. Incredible. That's it for today. There's some ideas for you on the short side. Nothing to react to necessarily immediately, but if the market does give way tomorrow, any one of these can be interesting plays over the next few days. Hello again, everybody.